Hello, everyone. Welcome to our webinar on how to analyze a mortgage investment corporation. I'm Sue McKittrick. I'm Senior Strategy Officer here at Alta West Capital, and I'm delighted to be your host today. It's my pleasure to introduce to you George Watros. Hi, George.
Hi,
And
everybody.
Charles McKittrick. Hi, Charles. I'll do some intros before we jump in. George Watros is currently CEO of Alta West. He's been CEO since April of 2021. Previous to that, he was CFO and CCO at Alta West. He started his own MIC in 2008 and had a successful amalgamation into the Alta West MIC in 2014. He is also a director of the funds that Alta West administers. So thanks for joining us today, George.
Thanks for
And
having me.
Charles McKittrick is chairman of the board. He has over 30 years of leadership and business experience. Previous to being chairman of the board, he was CEO from 2011 to 2021 when he became chairman of the board. He is also a director of the funds that Alta West administers. So thanks so much, you guys. Before we jump in, I will just introduce what Alta West does. We are an alternative mortgage lender specializing in residential real estate. We have been in business for over 32 years. In those 32 years, we've never had a negative return in our funds. We're very proud of that. And we feel that our story is really helping Canadians both on the borrower side and on the investor side. We have over $340 million worth of assets under management, and we are growing steadily. Before we jump into the presentation, I just want to say that what we are presenting today is meant to be for information purposes only, and it is not meant to be specific advice for your current situation. If you would like more information on the funds that we offer, visit our website at awcapital.ca to learn more, and one of our team members would be more than happy to reach out to you and discuss our funds. Before we delve into the world of mortgage investment corporations and the mix that Alta West administers, I'm just going to jump it over to Chuck and ask, is there anything that you would like to add about Alta West before we begin?
You've nailed what we are perfectly, and what people can't understand is what a blessing it is to be associated with Alta West and how many lives we can affect. We like to say that we Alta West Capital wants to change people's lives. We want to get borrowers into homes. We want investors to have security and understand their wonderful financial future in front of them. We want to assist our real estate community with their professional goals, and even our staff and stakeholders. We want to know that we care about them and the community. So it's been a wonderful journey that we've been on, and I think that we're all very privileged to be associated with this company.
Could not agree more. Thank you so much for that. Why don't we begin with talking about the benefits of investing in a mortgage investment corporation? Chuck, will you walk us through that?
Absolutely, George. You can. If I miss anything, George, you just let me know.
Sure.
Investing in a MIC is quite a unique thing in the Canadian investment landscape, because a MIC, which is a mortgage investment corporation, it is derived entirely of mortgages.
Mm-hmm.
And doesn't have to be, but ours definitely is. And the history of a MIC goes back many years. And there's both publicly traded ones, there's ones run by banks, and then there's private ones, which is what ours is. And so we would be considered one of the larger MICs.
Mm-hmm.
As you stated, we're over 340 million. But what a MIC does is it allows you the security of having an investment that's tied to a borrower's house, the mortgage, and the funds come in from all the investors, and we deploy the capital across hundreds. I think we're over 1,000 now mortgages, correct, George?
Correct.
Yeah, and so the investor has the benefit of their investments spread across 1,000 different mortgages across Canada, from Ontario to Victoria, and the interest that is earned from those mortgages goes right back to the investor. That's every dollar earned minus the management fee that Alta West Capital earns is passed right on through. Another thing that investors love is that there's a low correlation to the equity markets, meaning
Yes.
it's that we are not tied to the TSX. And so we don't rise and fall with the same volatility, and that this very steadfast, secure by the mortgage and stable investment just keeps chugging along so that we haven't even had a negative return since its inception. George, did I miss anything?
No, I think you've captured a lot of it. One thing we talked about a little bit of structure of the Mortgage Investment Corporation. It was actually carved out of the Income Tax Act.
That's right.
30.1 of the Income Tax Act. And the concept of a mortgage investment corporation is to act as an income pass-through. There's a pool of mortgages that are, again, like Chuck had mentioned, it's a very low correlation to other publicly traded markets. It's great diversification across, and in our case, about 1,000 mortgages, and we're passing that income right along to our investors.
Excellent. You both have made some really great points, and it makes me think that, investors today are looking for good returns. They're looking for transparency. They're looking for diversification. And we tell our investors, we don't want to be your whole portfolio. We want to be the fixed income portion of your portfolio, because that's what we do really well. And our product is eligible for funds like TFSAs, registered accounts, RSPs. So it makes a great way of tax deferral for an investor as well. Or they take their dividend, if they need it monthly, they can take their interest income monthly into their account, or they can reinvest it, which we all know the value of compound interest is phenomenal. So investors have a lot of choice as well when it comes to investing in our funds. Thanks so much.
My pleasure.
Now, George, will you walk us through how returns are generated in a MIC?
For sure. The concept, like we had just mentioned earlier, is that the Mortgage Investment Corporation is actually investing in a swatch of mortgages. In Alta West's case, it's about 1,000 mortgages from Victoria, British Columbia, all the way to Oshawa, Ontario. We predominantly in Alberta, BC, and Ontario. And the Mortgage Investment Corporation is really simply a little miniature bank. You have the investors on one side, you have the borrowers on the other. We're acting as the administrator and the manager in the middle, just to kind of, there's borrowers that fall out of the regular scope of regular lending. Right. We're helping those guys get in. We're helping that couple, that entrepreneur, that new immigrant to Canada, whatever that might be. We're helping them get the mortgage. They're paying back a slightly higher interest rate on that mortgage, and that gets passed along to our investor base. Really, I really can't complicate it much more than that. We're like a miniature bank.
No, that's great synopsis. And our terms are short. Our terms are between a year and 3 years for borrowers, with the whole idea being that they will eventually be able to go back to a larger entity, to a traditional bank, and perhaps qualify for cheaper money. So we are meant to be a short-term solution. The average borrower is on our books for about 20 months. Is that right, George?
Yeah, and it really depends. We've had years where the average borrower has been on our books for about 10 months. And in some cases with higher rising interest, they've stayed a little bit longer, but it's a short duration type of product for our borrower. And we're happy to see them graduate. We're more than happy. That's our goal. We want to help our borrower. And if we can help them get into the house and they can establish their credit, or they can, and predominantly not even really credit, they can establish that income pattern that allows them to qualify for an A lender, that's awesome. That's a victory for us and a victory for them.
Absolutely. Chuck, will you just take us through a little bit of how you touched on it earlier, real estate security, and a little bit of Alta West's track record and tenure as well?
Okay, that's I'll try and keep this as not simple, but as direct as George was with the mix there. So Alta West Capital we have two MICs, and they both operate in a similar fashion. So the security that also the industry word means that the security of the loan is against the house, the property. And so the nomenclature would be a house is a securitized loan, but if you compare it to a car loan or a personal loan that's just an unsecured loan. There's nothing tied to it, and the lender is doing against your good character. I guess in the car loan, they still have a car, a little more elusive. But in our case, the security that we have is how we value how we're going to place a loan against that borrower. And so where the house is, what geography it's at, what type of house it is, the state of the house, all those kinds of things play a factor. And we have very rigorous parameters that our underwriters will follow, so that it ensures the investor knows that we have very vigorous stipulations on what goes in and how it's monitored. Now, the thing that's also worked in our favor is over the last 5-7 years, the government, the federal government, has made it harder for banks to lend the same way. So a lot of those previous bankable clients, those borrowers that are just like you and me, they no longer are able to access capital from the banks the same way. And so they often end up in our lap, which is fantastic. Happy to have them. And as George said, we're happy to have them come in as a deal, and we're happy to see them graduate and go to a bank.
Absolutely. And I think important to note too that our book of borrowers has changed so much over the last 5 years. We have a lot of doctors, dentists, lawyers who have corporations, maybe have paid themselves a lower salary in their corporation, out of their corporation, and they can't qualify at a bank. So the quality of our borrower has changed because the Bank of Canada has and the government have made it so challenging for Canadians to qualify. Thank you for
That's
that.
right.
And we kind of touched on this a little bit earlier, but George, would you talk about our management fees? I'm sure it's on all investors' minds how we get paid.
Yeah, I think that's a great question, and I also think that's a great question whether you're thinking of Alta West Capital or if you're thinking of any other mortgage investment corporation. Manager needs to be compensated, but it's the manner in which they get compensated. Alta West Capital has been adamant that we're only getting compensated on share capital. We charge our management fee just on that share capital. We do not charge management fee on leveraged capital at all. We do not charge it on assets under management. So our management expense ratio would be a little bit less than some of the other prevailing companies out there in the market. And it really, whether again, if you're going to come to Alta West Capital, whether you're going to go to any other mortgage investment corporation, they're great investments, but they're very, very different in a lot of ways. So that's one of the ways they're different. And you should really think about how that's being compensated.
And further to that, George, our track record speaks for itself. The funds under administration by Alta West Capital, no investor has incurred a negative yield since the fund's inception. So they just keep on churning out positive yield, positive after positive yield, whether it's a war in the Ukraine or a financial crisis or COVID. We still manage to punch out a positive yield. So it's a very steadfast and stable investment vehicle.
For sure, absolutely. We pride ourselves on that. And we've gone through a lot of market cycles, not even just not COVID, oil market meltdown in Alberta, real volatility in Ontario in 2017. It's we've been around for 32 years.
Yeah, that's right.
And going strong with many more to come. And excellent points you both made. I want to get into a little bit about the portfolio, the loan sizes, and I'm certain that what is on investors' minds as well, default rates. We're in a higher interest rate environment right now. We've mentioned it's harder for borrowers to qualify, and I think that it would be great to talk about how we make provisions for default rates with our borrowers. So, Chuck, do you want to start us off with that? And George, feel free to jump in when you like.
Regarding the default rate, that is not a static thing. So the default rate refers to the number of borrowers that don't pay their mortgage payment. And so just like anything, there's a grace period where we try and reconcile with the borrower and see if they're going to make up their payments. And if they don't, we have a fiduciary responsibility to our investors to put them into the foreclosure process which differs from province to province. And so we historically have seen our default rate, it does ebb and flow with the economic times. So right now we have elevated interest rates and people are working, but their payments are more. So we've had only a slight uptick in NSFs, but our foreclosure rate has gone up, but the fund hasn't sustained any significant losses because of the excellent underwriting, the willingness of our team to work with the borrower. The market values have held up, so we're able to heal the issue with the borrower, whether they need to sell it or refinance it. But our historic default rates have been a fraction of a percentage, and they make a nominal difference to the end yield to the investor. And we have to take some risk because they're not bankable clients, but we are compensated by the return that the investor gets. So back to that risk return ratio. And I don't know, George, have I missed anything on that?
No, I think the one thing, and just to build on even a comment that Sue you had made earlier, is that over the past 5-6 years, we've moved up that credit curve. So we've actually the quality of the borrower that has been brought into AltaWest over the last 6 years has been, quite a bit better. Our default ratios, and this is a story, it's not even a story, I should say, the narrative around the default ratios are important, whether you're a new investor, a potential investor, an existing investor. We are running right now we're still, the default ratios at AltaWest today are still half of what they were pre-pandemic. We're very
It's remarkable.
It's unbelievable.
It's wonderful.
It's fantastic, and we've been able to weather storms throughout that. Right now, our risk management is twofold. One, we have an in-house default management. We have collections in-house, foreclosures in-house, and the other thing is through financial measures where we take a loan loss provision. We're actually provisioning for anything potentially that we may lose on.
That's right.
And if it doesn't happen, it's the investor's money. If we don't lose, it's getting bumped back as a bonus dividend. So it's an incredible active risk management that we take in our portfolios.
But even that, George, is that our regulators from coast to coast, we are obligated to follow certain procedures with it on how we set aside our loss provisions. And then we also have an independent board that we meet with several times a year to ensure that they feel that either we've taken enough risk, which they've told us to do sometimes, but also that we've guarded against some future issue by setting aside the appropriate loss provision. So we have done a multitude of different things to ensure that the investor, the end product to the investor, is a very steady and stable investment.
Income stream, yes. Excellent points. We are diversified across many markets from Ontario to BC. We have a strong underwriting team that looks at each borrower and the property that we're lending on a case-by-case basis. I think it's important to note too, we have different ways to qualify a borrower than a bank does, and a very conservative view of underwriting. And as we talked about the portfolios, we have two different funds that we administer, and I think both of those funds are loan to value in the 60% loan to value, which leaves a lot of equity in the houses that we lend on. So we have, and that is a result of many years of being in business and understanding that we need to protect both the borrower and the investor. Another thing, maybe George, you can talk about redemption policies on a MIC for investors. What kind of redemption timeframes could an investor expect?
It's again, this is a question for existing investors and new investors, and anybody that's thinking of any other type of mortgage investment corporation. Find out how quickly you can get your money back. AltaWest has prided itself for years and years on the best efforts basis, and right now we're redeeming within a month. Usually, like for example, if today was January 10th, we would be redeeming the first week of February. At any time, we try to redeem the first week of the following month. And happy to say, for the past 3 years, we've never, actually, even for the past 8 years, outside of a little blip in COVID, we've never deviated from that.
Yeah,
Great.
very good liquidity.
Very good liquidity. And it is our intention to help the investor. If they need the money for something, their life happens, right? So it's our intention to work with an investor. If they need the money, we are going to get them their money.
Absolutely. This is not meant to be a checking account, but like you said, Sue, it's perfectly said. The life stuff happens.
Yeah.
And we're more than happy to help in any way.
Absolutely. We feel we have a strong underwriting team. We are transparent with our investors. We're transparent with the borrowers. We work with the borrowers. We're diverse across many markets across Canada, urban markets. Before we close, is there any final comments either of you would like to make?
First of all, we'd like to say thank you very much for taking the time to listen to this information session with regards to Mortgage Investment Corporation investing. We hope over the last 15-20 minutes, we've impressed upon you the differences that Alta West Capital provides. You know, whether it's making a investment decision based on the management fee that a mortgage investment corporation charges, the type of portfolio that they're lending upon, the geography where they're lending. You know, there's so many things you have to think about investing, and there's so many things specifically that you have to think about investing in a mortgage investment corporation. So again, thank you so much. And if you have any questions at all, please contact our investor relations department at awcapital.ca. We'd be more than happy to offer any advice.
What do we want? We want to be the best performing fixed income product in anyone's investment portfolio, don't we? And we think that they won't be disappointed in us.
Absolutely. Our intention is not to be 100% of anyone's portfolio, but we believe that there should be a fixed income portion, and we strive to be the best fixed income portion in your portfolio.
Yes. We are helping Canadians both on the borrower side and on the investor side, and it's a privilege to be able to do that. Thank you so much, everyone, for joining us today. Thank you, guys, for your comments. Have a wonderful afternoon.
Take care.
See you. Bye-bye.